Pension funds are separate institutional units established to provide retirement income for specific groups of employees. Pension schemes may be administered by a separately constituted pension fund or a fund which is operated by an employer, which may include the government. To be considered a distinct institutional unit, a pension fund must have its own financial statements separate from those of the employer or sponsor of the pension plan. Pension schemes can be funded or unfunded. Only funded schemes which have designated financial assets or reserves designated for payment of benefits are included as separate institutional units in the pension fund subsector. Unfunded pension schemes are not separate from the employer or sponsor. The responsibility for benefit payments lies with the employer or sponsor without establishing a separate pool of assets. Such schemes are categorized within the sponsor sector and not the pension fund subsector. Funded pension schemes can be broadly grouped into three categories. First, those administered by financial corporations, such as insurance or asset management companies. Second, autonomous pension funds, administered by an independent board of trustees or directors. And third, non-autonomous pension funds, administered on behalf of the beneficiaries by the employer or sponsor. Pension benefits can be determined on either a defined benefit or defined contribution basis. In defined benefit plans, retirement benefits are calculated based on factors like length of service, salary, and retirement age. The employer or sponsor typically assumes the investment risk and covers any shortfall between the defined benefit payments and available assets. In defined contribution plans, as the name suggests, benefits depend on contributions as well as on the investment performance of the assets. The pension plan participants bear the investment risk since their benefit entitlement is determined in part by investment performance. Some pension plans are hybrid schemes, where a portion of the entitlement is based on defined benefit calculations and the remaining based on the contributions and investment returns.